Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup for the trading week ending Jan 15, 2021. I'm Preston Brent. Thanks for tuning in. Remember, you don't want to be a rat brain trader, be the red striped zebra. You want to stand out in the herd. And this week's theme, do you want to take the red pill or the blue pill? Let's just take a look at what happened this past week and then just a couple of things that could be coming up this week and surfacing here. So let me just come over here and let's take a look at the U.S. markets. You can see here that on a weekly performance basis, just about everybody in the U.S. was in the red except for the Russell. It's still strong, finishing up 1.51%. Year to date, everybody's in the green, but look at the Russell. It's leading the way. All the other indexes are just barely off center line. In fact, the futures and a few of them are below zero for the year. The Russell's up 7.02%. And if you look at the PE ratio, you can see the forward PE ratio is 24.15, and the dividend yield is about 1.56%. The 10-year Treasury, a little over 1.09, let's call it 1.1%, I guess. But the spread between the dividend yield and the 10-year Treasury is about 46.3 basis points. You can see the VIX finished up for the week, a little over 11.42%. Closing out the week at 24.34, the best performer for the week, still oil, energy. It had the best performance the prior week as well. The worst for the week was staples, consumer staples. Annual sector performance, you can see energy's up a whopping 12.47%, a big reversal from 2020 performance, and then communication services was the bringing up the rear for the year at 3.57%. Now, if we look at the remaining primary global markets, you can see also a little bit mixed for the week. You can see the FTSE, the London index, the CAC 40 and the DAX all down over 1.5%. The FTSE down over 2%. China was about break even, just down 10 basis points. Nikkei and the Hang Seng had a good strong week. And then year to date, everybody's in the green, just like the U.S. markets. The leading the way globally on the big indexes is Russell, and then bringing it up would be the Hang Seng and then FTSE. And if you'll remember, the Russell going through November of last year was the worst performer for the year. In fact, the all-time high of the Russell went all the way back to September 2018 until it finally made new all-time highs in November of this past year. So we're seeing this kind of catch-up mode here. All the other indexes are a little bit nervous right now. Let's just dig into it just a little bit through our weekly sound bites for the week. And of course, we'll talk about the market indexes first, right? So let's just focus on that. It was, like I said, a little bit of a mixed week, down mostly. We did see all of the S&P index futures hit record highs this past Thursday, and then Friday we kind of gave it back up. Biden had put forward his 1.9 trillion stimulus plan, and the markets didn't really like it that much. They sold off. Also this week brought the unofficial start of earnings seasons with the big global money center banking giants, JPMorgan Chase, Citi, and Wells, all beating Q4 estimates, but they ended up falling during the day. Also, analysts polled by FactSet are expecting overall earnings for the S&P 500 to decline about 6.8% year-over-year basis for 2020 in the final quarter once we get all of these settled in. This fourth quarter shown would be the worst over the past decade. And for 2020, analysts are anticipating that earnings fell 13% for the year. So that's just a little bit about kind of a backdrop of 2020. Most of you guys are already aware of that. If we look at the economic data this past week, we got a 70 basis point drop in retail sales for December, kind of more than expected. It was the third straight monthly decline. Sales fell 1.4%. So really not that good. We're seeing that COVID restrictions are still preventing the economy from growing like it should. Weekly jobless claims reported Thursday hit 965,000. That's the highest level since mid-August. We're also seeing the manufacturing sector kind of remained in better shape, with industrial production surging a little over 1.6% in December. That was roughly 3 times the consensus estimates in that. We also, if we look at it, and we take a look at treasuries here, we see that treasury yields lower on Friday because Friday was kind of a down day. Longer term yields increased modestly throughout much of the week, right? Supported by this stimulus plan and dovish comments from the Fed chair, Jerome Power Ranger, Boom Boom Powell. He kind of came out this past week and affirmed that the central bank really has no plans to raise interest rates anytime soon. He would first need to see inflation remain above 2%. So remember what, and this is what I've told our members, the big threat next year or this year going into next is going to be inflation. We've got to watch that very closely. Okay. And the other thing I'll point out, sentiment is very bullish, extremely bullish. I mean, when I'm seeing endorsements by Lindsay Lohan buying Bitcoin, or that Tiger lady that fought the other Tiger show on Netflix or whatever it was. When you get folks like these knuckleheads coming out and endorsing strong bullish plays, you got to be very careful. It's kind of like the old thing when you get into a taxi and the taxi cab driver says, go long gold, or your shoe shine guy says, yeah, pick up some blockchain, or pick up some Biogen, something like that. You just have to be very careful. Meanwhile, if we come over here and look at across the ocean here, shares in Europe also kind of fell with a resurgence in the COVID-19 infections, kind of denting some of the optimism there. Although the potential of fiscal stimulus in the U.S. is kind of keeping things in balance there. All right, so it's kind of triggering some reflation hopes across the countryside there, all across Europe, as lockdowns are coming, fast and furious there. And then finally, bringing up our Asian side, Chinese stocks were down a little bit. Okay, there was, I think, another 9 companies that are going to be blacklisted on the U.S. exchange. So that brings the total to about 44 names that the Trump administration claims have ties to the Chinese military. I would say basically every company listed in China has claims to the Chinese state, which read another way means have claims to the Chinese military. You could say every one of them. That's part of their law there. They have to follow it if the state calls on them. But anyway, also in China, we're getting small clusters of COVID-19 infections again, kind of appearing over there. So, and they just had their first death for COVID since May, if you could believe the numbers. We are seeing strong exports from China, better than expected. It was 18.1% year over year in US dollar terms. Exports have climbed. For all of 2020, exports grew a little bit less, 3.6% year over year. I think it was a record $2.6 trillion, while imports declined just a little bit, which would be more problematic for their middle class folks. And the latest trade data shows that China continues to record the strongest export growth all across Asia. Okay, so it does show the country's economic strength, as most other economies are struggling right now. So what I want to do is just go take a look at the charts in this holiday long holiday weekend here for the U.S. markets. As a reminder, Monday is a holiday for U.S. markets. Most other markets will be open, so it'll be a very light volume trading day when U.S. isn't playing. But I wanted to do this weekly roundup just to give everybody kind of a sense of where we are right now. So I'm going to switch the screen over, so just bear with me 1 minute. Let's just get it over here. I'm going to switch it over like this, and then we'll just move a few things around. It'll take a couple of seconds here to show up on your screen, and then we'll move forward. So what you can see here is the E-mini S&P 500 futures on the screen. You can see that blue line was the closing price of 2019. So the futures are officially in the red for the year. Now the SPX, the cash index, finished in the green and is up for the year, but the futures continue to sell off a little bit after the official market close at 4 p.m. on Friday. So you can see here on this daily chart, the 50 EMA. I do believe that once we take out this, we could have some follow through and come down and make new 2021 lows. You can see that would take us down below 36.50. Now, I've been telling our members that we should expect a 10 to 15% pullback sometime in February, March, sometime in Q1 time frame. I think next week vol is going to remain high, just because we got this inauguration and all these military folks out. So let's just kind of keep things close to the vest here. But that's kind of what I'm looking at here. And if we look at the uh, let me just pull it up on the screen here. We'll look at the Russell just so that you can see the strength of how it's looking here. The Russell futures, it was down whopping 41 points. And let me just readjust this, but you could see on Thursday, we made new all-time highs in the rut up to 2163, and now it's pulling back. But notice the rut is well north of its closing price of 2020. So we're well entrenched above and solid in the green, as I showed you earlier. If we look at NASDAQ, okay, you can see here with NASDAQ, let me just get this set on the thing here. You can see we're well in the red for the year for NASDAQ futures. All right, now the NASDAQ composite is in the green, but NASDAQ futures are in the red. All right, again, I think in this red line is the 50 EMA. It could take us down fairly easily next week into the 2021 lows. So we have to be very careful here on this. If we look at transports, okay, you can see here, and let me just remove this around. All right, you can see here in transports, and this is really the 2021 high. I've just got to adjust it, but it's moving strong. And then let's compare it with the Dow futures. If we look at the Dow futures, you can see here that the futures touched 2020 price, and then bounced back up just slightly in the green for the Dow futures. Okay, now all the cash indexes, the Dow, the Russell, the NASDAQ Compact, they're all in the green. All right, the futures, as you saw, a couple are in the red here. All right, if we come down here and we do look at volatility, you can see vol did move up for the week. You can see here it was a fairly choppy read. I mean, we came down and we came right back up, but we're staying above my key level here in the lower end of this rose-colored area. So there are certain strategies we do on options that depends on where and what section of volatility we're falling here. I think the odds, if we get up over 25 in the middle of this, then the odds favor us moving up towards the 30 area in VIX. So we need to be very careful with this coming week. Okay. And of course, if we look at treasuries, look at the treasury market, you can see we're continuing down here. Okay. And as you guys know, I've been saying all the way back here in September of last year, any move above the 50 EMA should be sold. And it just cannot hold. That's this red line here. And then we kind of capitulated a little bit when we made these lows here. I suspect we may get a little bit of a dead cat bounce, but again, that rally should be sold off. And again, the way to play that's TLT. Okay, I mean, look at it. This is just, it's a low-hanging fruit trade. It's one of our low-hanging fruit trades that, I talked to you folks here on this free update on some of our trades, but not all of them. But this is just another one that you just have to jump on board because it's a higher prob trade, and we like those, right? I mean, it's just one of those kind of trades. If we look at the 10-year interest rate, it's going to be going in the opposite direction. Look at that. That's a breakout, right? And if I kind of move it back, the next level is at about 1.26. Now, if we move up over 1.5%, we're going to start to see it affecting, I believe, the financial markets, because then our PE ratios are going to be forced to be cut a little bit, because you do all this discounted cash flow analysis and higher interest rates, it's going to affect yields and everything else. So, and if we reduce our PE ratio, then you're going to have to see a reduction in the equity markets, all right? Anywhere from 2 to 5% pullback just to equate to those PE ratios that we're seeing. So we're not there yet, but again, just to the opposite, anything below the 50 EMA, we should be long interest rates. And then let's see how that's reflected in the currency market. If we look at currencies, you can see the US dollar is bouncing off the lows down here, okay? And this was a low that was made on the 6th of January. But this was another low-hanging fruit trade that I kind of gave you guys for free. I said, we got to be selling the dollar, all right? Just selling the dollar, going along the euro. It's a no-brainer trade. It's a high prob trade. Now, my only concern is after going down like this, you're going to see it's a very crowded trade, meaning there are a lot of shorts in the trade. So we want to let this thing rally up. I think it's going to rally a little bit, and then we're going to want to sell into it again. And of course, if we look at the euro, it's going to be just the opposite. It's going to be pulling back at pullback, as I said, right down to my level here, my bigger support level. It's testing the 50 EMA. We're going to just wait and see until we get a signal to go long. Over here, again, part of our low-hanging fruit trade, I said, let's go long this, right, with bull put spreads, bull call spreads, or play in the futures market in currencies. It's a great way to go. Or you can go long in Forex, the euro dollar, but I like staying in the futures market a little bit better. That's kind of where we're sitting, guys. And if we look at the British pound, longer term, I am very bullish the pound. But look at the chop. I think as they work out the Brexit issues, they're working now supposedly on the financial side of things, trying to see how the financial markets are going to function. Because remember, London was a big financial trading hub worldwide, in addition to New York City. So we're going to see all of this play itself out, but longer term, I would look at being long the British pound. All right. Now, if we come down here and look at metals, let's look at gold. Gold fell hard. This was a false breakout here. This would have been a trigger to go long, but then the minute it came back down and did a retest, I was looking to see if it was going to go long again. It did not. So we're going to come back down possibly and test these lows down here. That's below the 1800 level. I think we'll see some support there. It's a psychological number. Longer term, I think gold's going to move up. Short term, it's being sold. All right. Same thing with silver. You're going to see a breakout on the downslope line here with silver. It's probably going to come back down a little bit lower. So we're on the sidelines on silver and gold, guys. The one that we love, copper. Here's copper right here, is pulling back right to this line here. Now, if we see a bigger pullback, 10 to 15% that I'm calling for in Q1, copper is going to pull back down as well. All right, everybody's going to pull back. Use it as an opportunity to buy. Members, this Sunday evening for our weekly market watch, I'll go through some great buy lists that we have. I spent most of this week adjusting and taking big profits on some of the stocks that we got long in. Copper was another one that I shared with you guys on this free weekly roundup, suggesting that we go long copper in the first week in April. And it's just been a home run trade. Okay. If we look at oil, I think oil, the short-term side is going to be up. It's just resting a little bit here. Remember, off of these lows here, I was saying bull put spreads, right? Those are credit spreads. Make them tight. Go out a couple of months, and I think it's an easy trade to do. At this level here, I don't see too much upside. It could get up into the high 50s, possibly test 60, but I think that's about it. All right, everybody, that's kind of where we're sitting right now. Excuse me. Everybody in the U.S. markets, Friday's a holiday. Everybody else, I'll see you next weekly roundup. Members, I'll see you this Sunday evening for our weekly market watch. Take care, folks. Ciao.